Okay, so today we are going to talk about EMAs. Okay, so today we'll be talking about what sort of sets off these signals, what gives you the trend shifts, what tells you where it's going, et cetera, and what each of them are. Okay, so yeah, we'll let you know. We'll give you a week in advance course so you can book it off. Okay, so what we're talking about this morning are our EMAs. Okay, so EMAs, for everybody here who knows, and some people are brand new and they're just figuring this stuff out. Our EMAs, EMA stands for Exponential Moving Average. Okay, so what that means is these lines you see on the chart, we got red, blue, and yellow, and lots of people use much more than these. The guy that I've spent lots of time trading and learning with, he probably has about 6-7 of these things on here. He is an EMA trader. He uses them to help understand where the chart might turn and move and head. Okay, so what we're looking at, remember, exponential moving averages. So what we see here, these lines we see on these charts, are essentially the price average. Okay, so the red EMA is what we call the 20 EMA. Okay, we call that the 20 because it is the price average of the last 20 candles on the chart. Okay, that's our first EMA. Let's type all this stuff out. Okay. Red. Okay, that is the price average. Ema'S. Candles on whatever time frame. Okay. I'm just going to put 20 candles. Okay. This is on every chart. So if you go to the 15, it's the last 20 candles on the 15 minutes. So just think of that red EMA when you go to the 15-minute chart is essentially what's 20 times 15. You got 30. You got 300 minutes back, right? Right. That makes sense. So it's essentially, it's a 5-hour. It's a 5-hour EMA. Okay. Right. Now we got our 50 EMA. Blue, price average. That's the same, right? That's the same for every time frame you go to. It'll be the last 50 candles. Okay. These are the 3 EMAs that I use. 238, which is yellow. Okay, which we're going to go over more here all by itself. Actually, we'll probably get into it today. We'll go over them all. Okay. Have enough time on how we use them all. Okay. 238 candles. Okay. Okay, so we can see. Right. So these are the 3 EMAs that we're looking at. I got it, Brandon, man. Guys, one thing I'll tell you here when we're doing these calls, I got it covered. Okay. All right. So I know lots of people want to jump in there and all those things, but I got you. Okay, so we got our 20, we got our 50, and our 238. Okay, so these are the 3 EMAs that we use here, right? The 20 is the price average. It's just a little bit too big. So make it a little bit smaller. Okay. Just because it might be a little bit too small. All right, there. If it's the screen just a little better. Okay, so our 20, right? is and I'm gonna explain it to you. Okay, everybody just hold on tight. Okay, so we have our 20, which is our average of our last 20 candles. Okay, then we have our 50. These two EMAs are essentially where our signals come from. And what that means is when these EMAs cross each other or shift, because you have the 50, which is the last, right, 50 candles, which is just a little bit longer time frame, and then you have the 20, when they cross each other, that just indicates a short-term trend shift in the market. Okay, not necessarily, as you can see, as we well know, these can be big long trends that last all day, right, on these shifts. But for the majority of the time, you're talking, a shift for, that happened at 1, this switched at 3, a couple hours, right? Couple hour trend shift. This happened at 4, ended about 5:30. You had an hour shift in trend. And this is the trend. We have an hour. We want to get in there for 15, 20 minutes, take our goal and get out, right? Another short-term shift on that chart that gives us an uptrend, right? And these short-term, this is the wave we're looking for. Now, when I use that analogy, that surfing analogy, these two crossing each other is the wave I'm looking to get on, right? Hit here, and you can see, right, our trend will be, we're on a downtrend. We'll go over that, of course, today, once we get to our chart setup. And you can see, right, there's your goal in that short-term trend movement, okay? Right, in that short-term trend movement. Bam, we got into this thing, we got our goal, we were done, right? But obviously went further, which we would have had to have rode this all the way up and down, but there's our goal, right? So when these two cross each other, the 20, which is the red, the 50, which is the blue, it indicates a short-term trend shift, okay? Those are the two EMAs that are the most important on here. We're going to go over a couple other pieces in the short term of how, we identify the EMAs, like the angle of when it crosses, the separation it gets, those types of things, okay? And go over all the different pieces of how these EMAs can help us. Okay, so when they shift and they cross each other, this is what we get. We get a trend shift. Okay, and we're looking at it right there. This would have been a nice signal because we'd be on a downtrend, I think, as well. I haven't really looked at the 15 yet, but okay, so that's the 20 and the 50. Now the 238, you're like, hey, that's a weird number. Where did the 238 come from? Why we got a nice round number like 20 and a nice round number like 50, and then you're throwing a weird thing like 238 out at us. Now, what the 238 actually is, this yellow is actually the 5-minute or the 50 on the 5. So let me go and show you. Okay. Right. So this yellow is right now at 32,992. You go to the 5-minute chart. You see where that blue EMA is? 32,992. So what we've done is we've just done the math for what this 50 EMA would look like if we wanted this level on our 1-minute chart. Okay, so the 238 is essentially the transfer of the price of the 5, right, onto the 1. And then if you went to what do we got there? 43, right? Right, we have that transfer over. Okay, so we have the transfer over from this blue, which is just going to give us on that 1-minute chart another, reversal level, right? This blue EMA. So our 50 average on the 5 is this 238. Okay, so that price that we're looking for on this price that this 238 gives us is, and we can do it here. Okay, so what it does, instead of us having to like scroll over to the 5 and be like, oh, okay, it's close to the 5 on the or the 50 on the 5, we actually have that, we actually have that EMA on this chart. Okay. So essentially it's just a longer term 50 that we're using as sort of our safety basket. Okay. And we'll talk a little bit more about that. Okay. As we get on here. And so that's what the 238 is. Those are your 3 EMAs that you see on here. Of course, you can use more EMAs if you like. And lots of people like to use the 100 and the 200, which are just in some of this displacement area here. You would see a couple other EMAs. For me, these are the most important. They give me my signal. They give me my rejection areas. These are the ones that I'm interested in. Okay. Now, how do we use these EMAs to our advantage? Well, first, when they cross, they give us that trend, right? They give us that trend shift. Okay. Right. They give us that trend shift. That's the first thing we do. Okay. Now, the second thing we want to do is we want to see the strength in them. Like, how hard are they? I like to use this term as like, if we're still using our surfing analogy, is like, how hard is that break coming? How fast is that wave coming to me? How big is that break going to be? Right. So when they cross, what are the angles of this EMA? Now, when they're crossing, are they doing this? Now we can show you both of them, right? When they cross, are they just barely crossing, right? With not much strength, with not much movement. Can everybody see what I'm talking about here as we kind of zoom into this one, right? They just had, there's not much separation and they're just kind of lazily crossing each other, right? There's not a strength to say, oh, okay, this thing wants to push a bit, right? So you just see that this doesn't actually have a lot of strength. Roping's not a bad term, kind of staying on top of each other. And you can see, right, cross, cross, cross. And this is a consolidation area. We want to make sure we're going to get big movements like when they cross, they separate and an angle comes, right? So I'm just going to keep using these cell signals as an example, but we see this cross, it has just a slight angle. It doesn't have much strength. And you can see that it barely breaks this 238, does drop 10 pips and then reverses, right? Not enough strength. And those EMAs are giving you an indication of how fast this might move when the cross comes. So if you see it doing this, just be patient and let it move and let it get some separation, which we're going to go over here shortly. Let it get that hard cross, right? That wave break. So you know you're going to get what you're looking for. Like you can see the difference, right? So if we put a straight line on here, right? Say we just kind of put a straight line on here just so you could see, you know, an axis of the angle. Like that's not much angle off the axis, right? Right? That's not much of an angle as they cross. Say there was a little axis there. And these are things you're just going to kind of have to pick up with your eye, that just didn't cross strong enough for me. Okay, that trend, the push, unless I do see this angle start to come, the push is probably not going to be a place where I want it. And it's okay if we miss a signal, guys. We don't have to feel like we need to get into every one of them, okay? And then you see there's an axis here, right? Okay, there's an axis here, but look at the angle of that EMA off that axis, right? Look at this, look at the difference in the angle of when they cross. And then you get, it heads down to your goal because it crosses with some strength and some movement and some quickness, right? This is the angle of the cross. So seeing how those EMAs, when they cross the angle of that 20, okay? Because the 20, it's always going to be the 20 that crosses the 50. I mean, I know they cross each other, but really the 20 is the driving force of the direction, right? If the 20 gets below the 50, it's going to be a red signal. If the 20 gets above the 50, it's going to be blue, right? So it's really the movement of the 20. You want to see the strength in these EMAs when they cross. Bam, big angle, right? We can even talk about the buy that comes out, right? It's kind of touching each other and touching each other. You can see they just stay close. It bounces off that 238, which we'll talk about more, and continues down. Okay. And then you can see this cross. Look at how this crosses it. This buy actually turns into a pretty solid trade, but look at the angle of this cross as it goes up. That means that this EMA, the last 20 average is heading up. It has strength. Made that 238 in the way, but it would have been an okay trade after the break of that 238, right? Okay, and there's a nice little double bottom. Alyssa spotted a little double bottom here as well. Okay, bam, breaks through these with these angles. So we want to watch for that cross, and then we want to watch for the strength of the angle. No, the axis, you want a straight axis on the chart because the 50 can be moving, right? You want to kind of see this axis as a straight line along the chart because the 50 is moving with it and is heading up as well. So if the angle between the two of those is not as strong, right? Think about it as if there's an x-axis there. Okay, that makes sense. Okay, and bam, that's that angle that comes off of it. Okay, so that is another piece of how we use these EMAs. We're like, okay, I'm looking for this next sell signal, which it looks like this is an old PSE, but it looks like this is going to come down at it pretty strong. So it's already broken below the 238. These are getting close to each other. The signal is probably going to come close to this POC. I might be a little bit careful with this signal to see what it wants to do. If that's actually the POC, which it probably isn't, that's our POC from yesterday. But those angles, you can already see that this 20 angle is starting to push downwards, right? See the angle that it's already on as it's heading back to the 50. When it crosses it, it's more than likely going to cross with some strength, right? And like cross it hard. Okay, so that angle of these EMAs as well on these signals, right? If you're getting a signal like this, where the angle is just not, it doesn't have a bunch of strength, right? Even here, right? No angle on this. I mean, this actually still goes, and you would get your goal out of it, but it would have been lots of up and down, right? And this just doesn't cross with strength, right? So you can see that it's coming at it, but it's kind of slows down, and you're like, okay, it's not coming at it that quickly. I want to see this thing come down, it ends up turning into an okay trade. But after the angle comes here, right, you can be like, okay, here's that angle I'm looking for. Maybe I wait for that pullback and join it. But when you see a nice strong cross like this, that's your indication that this thing wants to go. Obviously, the 238 was in the way, but still our goal off the 238 if we wanted to take it at 238. Okay, so that's another piece of what we look at these angles. We look at these angles on the strength of when they cross each other. Right? How hard are they going to cross each other? This was a counter over here, right? But it still crossed with this strength, and we got that push. And if you got in at the signal, which was a red candle, which would have been tough, counter trend trade, blue triangle on a red candle would have been tough. But after it broke this EMA, there was 40, 50 pips on the board after that. Okay, so looking for those crosses. Okay, and the angle coming off those crosses. Now we're going to talk about separation. Okay, so we're going to type this out as well. Okay, so those are your EMAs. Okay, those are angles. So things to look out for. Okay, so I'm going to get into this. I'm going to type in this again. I am going to make this a little bit smaller so everybody can see it. Okay, we're going to have an acronym. It's called the F. Okay, A, S. Okay, so when we see these, right, when we're looking to get into this market and we're looking at these signals, and yes, there are pullback entries and those types of things to stay on trend, but what we're looking for is, okay, the F stands for fresh cross. Okay, that means the EMAs are just crossing. Okay, it's a fresh cross, just crossed, right? We're not jumping in after 4 hours of the same direction, right? There has to be a pullback and a reversal eventually, right? The EMAs have just crossed, a fresh cross. Okay, now we're talking about the angle at which the EMAs cross. Okay, the angles of which these EMAs cross, right? So we're talking about how hard those EMAs cross, right? Is there a strength, a strong angle? Is it running? Is it something I want to get into like right now, bam, at the signal because it's running to each other? Is that angle, I like to use kind of a 40-degree window in my mind. If it's over 40 degrees, that's kind of the area I'm looking for, 40 plus off that. And if you need to kind of know what that looks like, just feel free to kind of figure out what those angles are and then have that angle in your mind. You're like, okay, that thing was that crossed. It's going to cross at a little bit higher than a 40-degree angle. This looks like it has some strength in that direction. Okay. So we have a fresh cross. We have an angle, right? I use it above 40 degrees. Okay. And you can go and look and be like, oh, that wasn't a good signal. And the EMAs, we didn't really quite get that crazy angle when it crossed. Right? Right? Angle at which the EMAs cross, looking for above 40 degrees. And that goes both directions, right? So below 40 degrees negative and 40 degrees positive, right? If it's a sell, 40 degrees negative, if it's a buy, 40 degrees positive. Okay. And the last piece, which we're going to show you, and this is going to help you kind of hold trades when you want to move your stop, right? When you want to, protect it, maybe take profit. It's separation. Okay. Looking for kind of about a 12 to 15. I really like let's just do 10 pips. 10 pip separation. We'll show you. Let's just do separation for now. Some of these might not have it. So we're just going to do separation. Okay. So remember that acronym: fresh angle separation, fast. Okay. So I use the word kind of fast in my head, but obviously no T. So fast movements. Okay. So I'm going to move this up just a little bit so we can see. The last one is separation. Now, because we see this thing freshly crossed, then we see that angle come. Now we can see that this starts to separate, right? Right? This starts to separate after, right? Cross is here, you get your cross, right? And that angle, and then this starts to separate. What do you think the separation means? What do you think the separation means? Okay. It means it has some more strength. It starts to separate, right? It's starting to separate. And that means, once it starts to, you can see they're starting to separate and getting further and further apart. That means that you have this push that eventually goes to your TP, right? So this is another way to look at it. Like once it's the separation, once these start to get a bit closer to each other, if you were still in this, that's probably the time where you want to look to maybe exit. And if you haven't hit your TP yet, to make sure you're in a protected position, because they're starting to move back to what? You get this big separation and then it starts to get smaller. What are these EMAs doing? They're starting to get back to each other, right? So might be potential if this wants to pop back up a little bit more, which this does, and essentially probably would have taken you out of break even instead of you taking a little bit of pips out of here, right? And you can see then this thing pushes back up to kind of back to the flashes through all these EMAs and then heads back down. But we want to make sure we're taking our goal in here. So if it wants to do this, maybe we get a second entry or we can wait it out. Okay. Okay. So, right. We have the separation of these EMAs, right? You can see another big separation here, right? So when these things start to separate from each other, that's when you're like, okay, maybe I'm going to get a little bit more of a push out of these. So, right, we want to talk about this signal over here. Did these things separate? Look at these signals. Did they separate from each other in here? What is this? What are we talking? A pip or two? Did they separate from each other? So do you think if it's got a fresh cross, it doesn't have much of an angle and it's not separating, do you think those signals are going to run and be strong? No, we want to wait to see this. We want to see this hard cross, because if we get that hard cross, we know that they're also going to separate, right? All those things, you get the fresh cross, the angles there, it crosses hard, you're going to get that separation as well. right? So you can see they kind of sit on each other and stay on each other. Then this crosses above all your EMAs, and then look at the strength of this, right? This move here, right? You're talking, there's 50, 60 pips in this because your EMAs cross. You don't quite get the angle you're looking for at first. It starts to get a little bit stronger, and then this thing gets further and further apart, right? And that just means that trend is getting stronger and stronger. They start to come back down and pinch towards each other. Well, maybe that's time for us to just take our profit, right? Close our trade, move on to the next one. Obviously, this one, if you would have got in here, this would have been a 50, 60 pip trade, which would have had plenty of profit. Okay, so those are the three things we're looking for when the angles do cross. It's not just as simple as like, oh, crosses and we can, and it is that simple. If people just come and take the signals, it is that simple. But once you start to really want to nitpick and you want to get super patient and you want to take the right signals, and these are things you look for, okay, in those EMA crosses. Okay. All those things make sense. Okay. Now we're going to show you one last thing here. We're going to talk about that 238 a little bit more. Okay. Okay. Good job, Mary. So I'm just going to take some of these little scribbles off that I got on here so we can talk a little bit. All right. Some little thing that I can't see. Okay. So we got our 20 EMA, which we went over, our 50. Okay. We went over the fresh cross, we went over the angle, and we went over the separation. Okay. We want to see these start to separate. As they start to separate further and further, the stronger the trend is going to get. Let's go find one of those big movements, right? This is one of those. That's not even it. Where is our crazy error? So if you're watching these trades, right, come out of here, this thing crosses, and look at just continuously getting further and further and further and further apart, right? Crosses strong, further and further and further apart, right? So you get some of these pullbacks and you can see that separation wants to stay essentially the same. These EMAs aren't really coming back to each other. This is when you get one of those long runs. Okay. Now, I'm going to talk about the 238. Okay. The 238 is what we like to call, okay, is what we like to call our safety. Okay. To call this the safety basket. Okay. This is the place where if the chart gets on top, okay, this is sometime, let's not do that. Okay. It's not going to bring my text back. Oh. It doesn't work on my computer, my Mac. Oh, you ready for this? I just tried to do that. I went back and clicked it, but in order to get it all back, I'm going to have to bring everything back on my chart. So just give me a sec here. It's not coming back. Awesome. No, it's not in the forward, guys. I don't know if there's a way to bring back my text. That is it. So she's gone. That's fun. We're going to retype that out now. It's fun. Okay. Actually, I'm not going to type that. I'm not going to retype that out. We're just going to talk about. You can't copy from my Zoom. So we're just going to move on from it. Okay. So, is what it is. But what we're going to talk about is the 238 and how it is a safety basket. I hope everybody got all those notes out of there. Okay. What we're going to talk about is the 238 and how it's safety. So what it does is, as you can see, say we're in this cell. Say this obviously comes and breaks back above this. And that would be, a break even, or you'd be locked in at this 238 when it broke back down. It's 238 because it's the 50 on 5 are places where this thing could potentially reverse, right? So once these things get back above or below it, this can be a very, very strong bounce area. Okay, so as you can see, as it stayed in this downtrend, it only crossed it once until all the way down here, till the signal actually switched at the cross. So as you can see, if you did get into this thing and you left your stop, right, this would have been a hard thing to hold it through because it did come and break back above that 238. But after that, you can see, right, how it comes back. Okay, close to those 238, close to that 238, and it stays, and hits it, reverses, hits it, reverses, hits it, reverses. Right, so if you manage to stay out of this, which would have been tough, this is just indicating that this wants to continue on that down. And then when it does come up here and finally break it, it pushes through it. Okay, so this is your safety zone. This is if you're in a trade, this is if it breaks that, pretty good chance it's going to break that and reverse all the way. Okay, back to your stop loss or your TP or whatever that you might be looking for. Okay, so this 238 is like that log. We talked about it a little bit more, okay, the other day. This is like that log that's in the way. So even on this signal, it came right down to that 238, and then it did break through it. Okay, that 238 could have been your entry, and it would have been much safer. And you would have took 40 pips instead of 50, with just being a little bit less risky by that log is in your way. Okay, so what we have is a place where it's going to tell us that it's actually, this actual reversal through it, right? If this thing did go to a buy signal and hit this and bounce back down, even if you were still in that cell, that it might even be a place to continue to hold it. But this would be well past our goal by then. But you can see how this 238 plays as something in the way. Okay, I'm going to show you something that this 238 does. Okay, it happens lots and almost always happens when it breaks. Okay, it's a pullback. It's a place where the pullback happens. So what usually happens in this 238, and I'm going to show you, and you guys will start to see it come. Okay, what it's going to do is it's going to bounce. It's going to push through the 238 and come back to it. Okay, so if you were using this 238 as a place to enter, you'll want to wait for it to break through the 238, come back to it, and then enter it on the way up if you were going to join it as a pullback. Okay, this isn't a huge example of it, but you can see it did it over here too, right? It actually broke through here. It didn't actually hold the other side. When it comes, it does hold the other side. What does it do immediately? Flashes through, holds the other side immediately. Actually in the same candle, the next candle pushes right back to it. Now, if you were thinking about joining this signal actually turned out to be okay. I mean, I don't know if that's a POC in the way or not, but it wants to do this as it comes through the 238. It usually in the next 1 or 2 candles comes back and tests it. Okay. Yeah, we'll do the POC after. I'm not worried about it. Okay. This 1 out of 10 times, 2 out of 10 times, it runs right through that 238. It doesn't happen very often, but when it usually goes through the 238, right? Pushed right through, rejected. Pushed right through, rejected. Okay. I can't copy and paste that. That's it. I don't have that ability, so putting it in there doesn't do anything for me. Send it to me. Telegram would be nice, but you can see, right? Look at This didn't quite make it through, right? Push through, right back down to it, right? All these movements through the 238, right? Broke through it, close on this side, immediately push wick right back to it, and then headed down. Right? Just look at how this thing breaks, and keep watching your trade, your signals. Thank you. Just watching these, right, as they come through. So you got your bounce off, finally breaks through, then you have an immediate wick back to that 238, and down we go, right, as it crosses through. And this one just had a little bit of a doge candle, right, broke through, and it just kind of flashed back down slightly, then back up, right, broke through. Look at how this over and over again, flash back down to it, then back up a bit. Look at this. Look at every time this thing breaks it. Look at, broke through, back to it. Broke through, back through it, right? Back through it and down. Look at on all of these, right? Flashes through, broke back down, ran. See how this can start to help you if you are trying to enter or exit off of this 238. Say you're looking for this signal and it's coming to this 238, breaks through it, wait out that little pushback and then back to it and see if it's going to bounce back off that 238 and continue in that direction. If not, it's going to push up and then come back down here. Right? If it bounces like it did right here, up it went. Okay. And this is, right, you get into this thing, it breaks here, you get into this at break even. Once it flashes through here, you don't want to take your stop and put it there right away, because it's going to go flash back up, bam, and tap it and then run, right? So give it space, let it do this, and then once it breaks through and holds the other side of that EMA, then you move your stop up to that 238. Yes, you can, Jim. I mean, this is what this is. Are you talking about the chart when it crosses? Tough place for an alert because it can go over and over and over and over again, but you can definitely add that. Okay. You're talking about when the chart crosses it, but that, that's a bit of a scribble, but you can see, look at this EMA over here, right? You're like, okay, I like this L that's coming next. Flashes through here, bounces back up, and then back through the 238. And there's potentially, if you took it here, there's 30 pips. I mean, a pretty tight trade there for about 20 pips before it reversed on you. But do you see how that happens as soon as it breaks the 238? So if you're in one of these trades, let it do its thing at that 238, broke through it, flashed back to it, pushed away from it, and you can move your stop up. Protect more pips. Okay. I'm going to stop recording and then we'll get into some questions. Actually, you know what? If you guys have some questions about the EMAs, you can stay and keep them recorded so people can see some of the recordings. Okay. Go ahead and ask your questions if you have some here. Lots of training here on a Friday. How do you use the EMA shallowing out? How to stay ahead of the change in trend? EMA shallowing out on the one. Okay. As in when they start to do this. So if they start to get really shallow and stay on each other, I'd just be patient. I'd just be patient to see how fast that's going to go. Lots and lots and lots. One thing in here is there's lots and lots and lots. While you're in the trade, it starts to shallow out. It looks like it's going to come back. Maybe that's an opportunity for me to get out of it. Or maybe that's just a place where I go and protect it. It's like, this thing looks like it might want to come back to each other slightly. This is a place where I want to protect it. Okay. But I like the angle on this. It's a bit shallow. It's not bad, but as you can see, there's the 238 was right here. It did get back below the 238. Is a bit of a short-term counter trend. And I haven't looked at the long-term trend yet. I probably would have taken a few pips out of this signal. 238, they then came down and kind of started to turn. I probably would have got myself in a protected position because that little green star would pop there. I wouldn't. Go ahead. McCoy just said, if you were to, I'm sure that means to add another EMA, what would it be? I got 3 of them. They work good for me. That's all I need. Okay. Any other questions before I kill about EMAs here before I... we want to talk about the super. Okay. So another thing with these EMAs, we're going to talk about the super trade. And that is something I was going to wait for a little bit further on once we get some more education and but we can record this so that people can see it. So we have something we like to call super trade. Okay. Super trade. Okay. This is when the 20 and the 50 cross the 238. Okay, I'm going to show you what that means. Okay, we have our signal. Okay, we have this head back down. This doesn't actually become a super trade until actually you would have had to. Okay. Okay, we wouldn't have had a super trade until after, but we did get that, and we probably would have been out of this trade by the time it turned into a super. But when the super trade comes, you can see normally we want to see them happen like in close to each other. This does eventually do it, but they're really far apart. So let's go find a good one. Okay. And I know that. I just want to find one that happens. Okay. So here is the super trade. It kind of happens before the signal, but turns into quite the trade. Okay. So both of these EMAs at this point are just above. You can see the 50 gets just above it, right? Then they both cross, right? They both cross through the 238, which means that both of the short-term 20 and the 50 are actually crossing through the 50 average on the 5. That means both of the short-term trends here are actually crossing through the 50. Right. And as you can see, this trade is a 10% trade, which then it runs and runs and runs. Right. So it happened right before the signal. You're like, okay, both these EMAs just crossed over the 238. Now the signal came. There's a separation, there's an angle. Everything looks good to join the signal. Okay. And the super trade part is when both the 50 and the 50 and the 20 cross the 238. You can see when it did that, we had this long run. Okay. Yeah, there's no strength in that move. And you could already be in it, but you'd probably be out of this trade already. There's no strength in it. Here's another one, right? Signal right at the bottom of this 238. And then both of these EMAs cross the 238. Okay, both of these EMAs cross this 238 on the way down. Okay. Right. Okay, and then both of these cross. Okay, for a super trade. Big old circle there. You can see, and you would have been able to be like, okay, both the EMAs crossed here too. Maybe I can hold this a little bit longer, see if this comes down to my TP. Okay. All right, I'm going to kill the recording here.